Hi, my name is Dick Jones. I'm the tax problem guy. You know, I've had a lot of questions over the years because I've been solving tax problems for 26 years. And one of the big questions is, what is a trust fund liability? Well, first of all, to have a trust fund liability, you have to have a corporation or an LLC that files as a corporation in order to have the protection of the trust fund. Okay, let's say you haven't paid the payroll taxes. That's where the trust fund comes from. So you haven't filed and you haven't paid the payroll taxes for the last year, let's say. So what they do is, obviously, when you file your payroll taxes, you have to file on the wages you paid, plus the FICA and Medicare tax doubled, plus the withholding tax, and then you have a net paycheck. So let's say all of that was done and you filed your 941 taxes and you couldn't pay them. You're a corporation in good standing, and IRS, let's say you went out of business. IRS has no assets in which to collect from the corporation. But since you held FICA taxes, Medicare taxes, and withholding taxes out of your employees, actually you held that money in trust for the IRS to be paid over. So they will assess an individual, and it's usually the president of the corporation or whomever they designate as a responsible party, to pay the trust fund penalty. The trust fund penalty, however, can be asserted against a person in the office that is responsible for doing payroll, signing checks, and other things. So there's a trust fund interview that has to be conducted, and the trust fund can be assessed against more than one person. It can be assessed against the bookkeeper. It can be assessed against the president because they had knowledge. It could be assessed against anybody that had knowledge and control of the money and how to pay the bills. The trust fund penalty is figured without interest and penalty, and it is the amount of withholding that you held out of the employee's paycheck, plus the appropriate FICA taxes and Medicare taxes only. You are not assessed the amount of the trust fund or the amount that you have to double on FICA taxes. So you're assessed 7.65 of their wages, which is the FICA taxes and the Medicare taxes, plus the withholding, and that's the trust fund amount that has to be paid over to the government. Let's say you're a corporation and it's gone belly up, or let's say you're a corporation and you're in business, but you need to get the payroll taxes paid. Don't just send them money, because they're going to apply that any way that they want to. If you got behind with payroll taxes and you're trying to pay them, make sure that you designate those payments to go to the trust fund first on your check. Perfectly permissible. And then if it turns out that you can't pay all of it, at least get the trust fund portion paid so it won't be assessed against you, and the corporation will have to continue with that liability. So if the corporation goes out of business, the trust fund amount is paid, then there you go. It dies right there on the vine, the rest of it. The interest and penalty and the amount that you have to match. So I hope I've explained a little bit about the trust fund penalty. And if you have a trust fund issue and you have more questions, call me at 573-341-5578. And remember, if the IRS is going to try to assess the trust fund against you, make sure that you look at all avenues. Just because you own the company, you might not be responsible. It might be another person. Thank you.